In 20 days, the debt rose by $168 billion in 20 days. And I mean, we're so far past being insolvent and broke that this is not about becoming wealthy. It is the realization and the understanding that the people accumulating it, the most well-informed traders in the world, they're not buying it to get wealthy. They already have more money than they would ever need. They are the central banks. They're buying it because it is wealth, and it is being, as Vince said, remonetized in every currency around the globe. This hasn't happened in dollars yet. It will. And I know people are saying, yeah, bullshit. It's been insufferable for a long time, and it has. But that, if you take a step back and think logically, I mean, there's got to be a significance to that. Why do they not want it to go higher? Why are they trying so hard to hold it down? You mentioned the ETFs. Ted Butler just said that in one day, the other day, in one day, someone or some entity shorted 12,599,986 shares in one day of the SLV ETF. Well, silver's up today. What are we up today? Let's see how that person is sleeping. Oh, it's up 37 cents an ounce. That person's getting his ass kicked. Is it different this time? I don't know. But what is not different this time is the American public participation, because this is why, Chris, so few people succeed in investing, because they follow the herd. I mean, we've seen very big orders where people who understand what's happening.
Good evening, and welcome to your trusted source for global economic insight and precious metals intelligence. Today, we bring you a potentially market-defining development with serious implications for silver, gold, and the broader financial system. In a stunning move that has caught the attention of experienced market observers, a jaw-dropping 12,599,986 shares of the SLV Silver ETF were shorted in a single trading day. That's right, over 12.5 million shares. This news, brought to light by respected metals analyst Ted Butler, signals not just an aggressive short position, but perhaps an attempt to suppress the silver price at a time when the market is showing signs of strength. What's most striking is that, despite this aggressive short, silver still managed to move higher on the day, up 37 cents an ounce. That move defies traditional expectations and signals a shift in sentiment, with veteran metals expert Andy Schectman stating plainly, "This time, it feels different." According to Andy Schectman, CEO of Miles Franklin Precious Metals, these are not ordinary times, and these are not ordinary market players. The people accumulating gold and silver right now aren't doing it for quick profits. They're not momentum traders or meme stock chasers. They are central banks, the most well-informed and well-capitalized institutions on the planet. And they're not buying metals to get rich. They're buying because gold and silver represent wealth in its purest form, tangible, time-tested, and immune to the failures of fiat currency.
Are taking initiative, and we've seen large orders. But in March and April, when Silicon and Signature failed, we added 14,000 clients in 45 days. That's 4 or 5 years worth of clients. We're not seeing that type of participation. We're seeing participation from the people who get it, the people who've been listening to you through all of this time and understand. You see, I think too many people have become fixated on making huge sums of money very quickly. As fun as that sounds, 34 years of industry in finance has taught me that that's an anomaly. Bitcoin and Nvidia and these things that have made people very wealthy very quickly, that's the fixation. And they've ignored completely. There's no fanfare. There's no talk on the media about it at all, virtually. I mean, there's a one story, but that's a bank putting it out. That's not CNBC. And so no, the public participation still is less than about 0.5%. That's the estimate from Joe and Jane Sixpack to the Harvard Endowment Fund. So it is massively underallocated, and it is massively underspoken of. And everyone's talking about Bitcoin and AI stocks, and quietly the tortoise marches on. And it's, look, it's outperformed most asset classes for the past 25 years unnoticed. And now, especially with it at $2,300 an ounce, you would think it would be everywhere, but it's not. It's not flashy. It's not sexy, because hell, Bitcoin is 70,000 bucks a coin. So that's way more fun to talk about. I get it. I understand it. But in the scheme of things, what is the one asset that every single central bank on the planet is in search of? It's gold. And so I think that who knows how high it goes? Who knows how high silver really, truly goes? But I think it will go higher than anyone thinks possible. And what it really offers to me is an exodus out of a system that is crumbling, that is breaking, where in every 3 months we're adding $1 trillion in debt to the system, where in 20 days recently, I just wrote down the number here, in 20 days the debt rose by $168 billion in 20 days. And I mean, we're so far past being insolvent and broke that this is not about becoming wealthy. It is the realization and the understanding that the people accumulating it, the most well-informed traders in the world, they're not buying it to get wealthy. They already have more money than they would ever need. They are the central banks. They're buying it because it is wealth, and it is being, as Vince said, remonetized in every currency around the globe. This hasn't happened in dollars yet. It will. And I think that, buying silver right now, sub 30 bucks, is a generational gift. And that doesn't come out of my mouth easy, because I know people are saying, yeah, bullshit. It's been insufferable for a long time, and it has. But that, if you take a step back and think logically, I mean, there's got to be a significance to that. Why do they not want it to go higher? Why are they trying so hard to hold it down? You mentioned the ETFs. Ted Butler just said that in one day, the other day, someone or some entity shorted 12,599,986 shares in one day of the SLV ETF. Well, silver's up today. What are we up today? Let's see how that person is sleeping. Oh, it's up 37 cents an ounce. That person's getting his ass kicked. Is it different this time? I don't know. But what is not different this time is the American public participation, because this is why, Chris, so few people succeed in investing, because they follow the herd. That's why there's wave theory, Elliott wave, Kondratiev wave, emotions. It's much harder to do what you and I have done, stand out in front of the public when it wasn't obvious and saying this is coming, than it is for the people to stand out on a limb and spend their own money.
Schectman emphasizes that we are beyond traditional definitions of solvency. He points to a deeply troubling figure. The United States added $168 billion to its national debt in just 20 days. That kind of unsustainable borrowing paints a clear picture. This is no longer about building wealth. This is about protecting it from a system that is slowly, and perhaps irreversibly, unraveling. Schectman argues that what we are witnessing now is an exodus, a quiet migration of capital, out of a crumbling monetary system and into assets that offer safety. And yet, despite the clear warnings and the steady movement of central banks, public participation in precious metals remains shockingly low. Only around 0.5% of American investors are currently allocated to gold and silver. That's not even 1%. Meanwhile, the media and financial world remain fixated on Bitcoin, artificial intelligence stocks, and high-flying tech names like NVIDIA. Schectman points out that while these assets have indeed generated impressive returns, they are also feeding a culture of greed, and greed, as he reminds us, blinds people to risk. He reflects on the banking crisis of 2023, when Silicon Valley Bank and Signature Bank collapsed, triggering panic among depositors. During that brief window, his firm added over 14,000 clients in just 45 days, a number equivalent to 4 or 5 years of business compressed into 6 weeks. That level of demand, he warns, could return instantly in the next crisis. And when it does, there will be no time to react. Inventory will disappear overnight.
Believing that. Most people don't believe their own intuition. They don't listen to it. They follow the herd and an advisory who typically is wrong. And look, you could say we've been wrong by missing out on some of the run in the stock market, but everything has a cycle. And I think in 1 or 2 or 3 days, being right will end up saving untold amounts of money. you can be wrong in the path of a circle until you get to that inflection point. And it just feels like we're getting to that point. I guess I'll just simply say this. In all of my career, honest to God, this feels different. Now, I'm sure by the time you post this, it's going to get clobbered and I'll be wrong. But I will tell you, if I were being completely honest, having a scotch with you, I'd say, man, it feels different. Something feels different. Market has got strength that I have never seen and resiliency that I have never, ever, ever seen. So I guess we'll see. Things have changed little by little by little, then bang, all at once. I mean, talk about censorship. Prior to 2020, we never would have dreamed about having to not say the name of a virus or the president's son's name or any of these things that back then would have got you taken off of YouTube. But little by little by little, then bang, all at once, everything changed. But that's happening across the board in everything: culture, economics, geopolitical events, political, everything. So that's going to be tattoo number 2 underneath the periodic table of elements. Silver Eagles are coming up, and that's the first time I've seen it, and they are a precursor. They are coming up again. And we have a special right now that's maybe better than anyone in the country, maybe less than 1 or 2 companies in the country are priced lower. I don't know, but we have 2024 Silver Eagles. You can only buy 1,500 because the mint hasn't really produced much of anything since March again. But 1,500 at $5.50 over spot. And that's higher than, maybe 75 cents higher than they were just a week or 2 ago. Premiums are rising on the Silver Eagles. Nothing else yet, but that to me is indicative of, perhaps a leading indicator of higher premiums coming ahead. What's interesting to me is that most of the people I talk to these days want Silver Eagles. They do, and right, wrong, or indifferent. So maybe that's part of it, along with the states that are approving, legal tender coins as currency. There's something, I think, to be said about that. We also, by the way, have junk silver priced at $275 over spot in stock as well. I know you usually ask me what the specials are, so I'll just preempt that. But I would just simply say this, that, well, look, in all of my career, I don't know that I've seen maybe once or twice premiums as atrocious as they are right now. I mean, they're low. And that is another thing to keep in mind. How is it that if the public's not buying, in fact, they're selling? I mean, look, our business is very strong, but not what it should be. But with the public selling, with outflows out of the ETFs, with rising real interest rates, with the rising dollar, all of these things, and the public not participating, and yet the metal keeps going higher. This is why I say it feels different. And the one thing I've learned in this industry about availability, about supply, is that in the blink of an eye, it can change. Because what I consider to be overly stocked and flush with supply would last 10 minutes if the public woke up. In an environment like we saw in March, where a bank goes under and God forbid gets bailed in, and the rush to acquire physical in their possession quickly, in 10 minutes would blow out the industry. And, $1 billion in this industry is now on back order. It sounds like a lot of money, but it is. But, how much business would need to be done by a public if the 0.5% allocation increases just to 5%, a tenfold increase in the public's demand across the board for gold and silver like that wipes it all out. And so, yes, it's flush, and yes, the premiums are low, but the public's stupid. The public is focused on greed, on AI, on Bitcoin, and greed kills. Pigs get fed, hogs get slaughtered. If you made all this money in crypto, if you've made all of this money in AI, then take some of the money off the damn table, be smart, and move it into an asset that is still massively undervalued by all measurements, geologically, historically, inflation adjusted, and hedge your bet. There's too many people out there, whether it be in the crypto space or in the traditional security space, who believes that assets have to be mutually exclusive, that you can't understand diversification amongst asset classes, like real diversification, not just all of stocks, bonds, and real estate. And okay, some crypto. How about some non-dollar denominated assets like precious metals? And in the case of silver, it's one of the few assets on the planet that is grossly undervalued and underappreciated and underallocated, yet country like India doesn't see it that way, as they
Now let's turn to the physical metals market. Schectman reports that premiums on silver eagles are beginning to rise, signaling increased demand. The 2024 silver eagles are now priced at $5.50 over spot, a 75-cent jump in just 2 weeks. His company is limiting purchases to 1,500 coins per customer because the U.S. Mint has barely produced any new inventory since March. To Schectman, this is a clear warning sign, a leading indicator of tighter supply and rising prices ahead. And here's the key point. The illusion of abundant supply is just that, an illusion. Right now, dealers may appear to be well stocked, but all of that could change in an instant. Schectman explains that if public allocation to silver increased from just 0.5% to 5%, a tenfold jump, the entire global supply chain would be wiped out in minutes. He then delivers a message of caution to crypto and tech investors. If you've made significant gains in Bitcoin or artificial intelligence stocks, now is the time to diversify. Take profits, rebalance your portfolio, and move a portion into tangible assets that have historically held their value. Silver, he argues, remains one of the most undervalued assets in the world today, undervalued by historical standards, by geological scarcity, and by monetary relevance. He contrasts the American investor's indifference with what's happening abroad. In just the past 2 years, India has imported over 400 million ounces of silver. That's not speculation. That's a deliberate monetary strategy. While the Western investor focuses on short-term gains, Eastern markets are quietly accumulating real wealth. As Schectman puts it, return on your money is great, but in this environment, return of your money may be even more important. He closes by addressing a broader trend, an erosion of trust in institutions, the rise of censorship, and a growing sense that everything is changing, not all at once, but gradually, and then suddenly. He recalls how the world shifted after 2020 and warns that the next shift may be even more dramatic. He says, "This feels different." And coming from someone with over 3 decades of experience in finance, that sentiment carries weight. In EU. Summary, we are witnessing early signals of a turning point in the precious metals market. The massive SLV short, the resilience in silver prices, the rising premiums on physical coins, and the quiet accumulation by central banks and foreign governments, these are not coincidences. They are signs. The question now is, will you wait until the next crisis forces your hand, or will you move before the crowd? This has been your Precious Metals Economic Bulletin. Stay informed, stay prepared, and as always, invest wisely. Would you like me to now suggest a YouTube title and thumbnail caption to match this script?